Welcome to Investors Insights. Our topic today is deep breath, new year. We're starting off the year here. We've got a lot of activity going on geopolitically. There's a lot of people out there already emailing and calling us about what's going on in the world in relation to the U.S. and U.S. markets. And so we wanted to address that on this vlog today. So Bobby, you started us off this morning, so give some insight there.
Yeah, so no guarantees as always, but when we have Middle East crisis events happen, we look to historical standards to see how the market reacts. And so no guarantees, but historically stocks and oil tend to outperform defensive assets like gold and treasuries in the months after a Middle East crisis. So we usually see gold and treasuries spike in the days or a week or two after. But historical market reactions to 20 Middle East crisis events over the past 3 decades show that on average, the S&P 500 is up 65% after 1 month, up 75% after 3 months, and then oil is up 80%. So barring a major escalation, the backdrop for equity still remains pretty strong.
Yeah, and that's the thing. That's why we said deep breath. Just take a deep breath. There's a lot of noise. There's a lot of details to be worked out and how events pan out. But also, we have a very strong economy. Now, Trey, you brought up about gasoline prices.
Yeah, the only way this really could impact the U.S. economy is the U.S. consumer. We talk all the time about the most powerful force in the U.S. economy is that U.S. consumer. And will these oil spikes that Bobby mentions, that energy usually is up 80% of the time after these crises, will that hit the U.S. consumer? And I think this will be the real first test of U.S. production. Can the U.S. production keep the U.S. consumer out of this conflict? And recent history says that they can. We had that recent bombing of Saudi Arabia where there was a huge 10% spike in oil, and then it came right back down because our producers greatly increased production like that. Mm-hmm. And so can we do that, which will greatly benefit the U.S. market, U.S. energy producers, and the U.S. consumer? It's kind of a win-win-win. You don't want any conflict to go too long or to be negatively impactful to the global situation, but we could be a little more buffered than historically speaking.
Right, yeah, and that's great, and that's the kind of data that we're going to be looking at to keep people informed. And as we say here at Five Plan Partners, anxieties are those events that 9 times out of 10 will never occur once you have the knowledge that gives you confidence to confront the fear. Mm-hmm. And we're going to be looking for that knowledge and information to let us know how to navigate through these geopolitical events. Mm-hmm. Ashley, you also talked about that in relation to the Fed, yes, they have a lot of options as well to help this economy should it start to impact it.
Oh, absolutely. What Greg's talking about is former Fed Chairman Bernanke over the weekend was at a conference in San Diego, presented a paper, and he said exactly that. We get a lot of questions from clients to say, well, with the rates being so low, can the Fed do anything else? And the answer is absolutely. You got the 3 main things: the quantitative easing, we've talked about a lot, more forward guidance on communication and working with other agencies like Treasury, like the tax cut. And then you can look at, we've got that 2% inflation target. You can always change it.
Right.
So there's a lot that can be done. That's a huge Fed, and we're a huge market. Yeah. Plenty left that could be done.
Yeah, very much so. And then, Adam, you were so positive here, and I appreciate your comments this morning about just how we need to look at things. That yes, there is the noise, there's anxiety and fear, but let's look at the facts.
Yeah, of course. I mean, the noise is going to be Iran. Iran's going to dominate the headlines this week. We know this. So let's get back on a geopolitical level and look back and reiterate what we said last week. Let's look at the U.S. consumer. I mean, they're obviously doing well. Let's see if they can withhold this test. I like to say as I drive by houses and I see boxes in front of houses and people in the waiting lines and pickup lines at retail stores, that's a good indication of the consumer. So if we're keeping inflation low, unemployment low, then there's still room for growth. So from a U.S. standpoint, we still want to see that growth continue.
Right. So in this information age, the information comes at us, but we're going to keep you informed. And we thank you for this past year and for the confidence and trust you're placing in us in 2020. And we will keep you updated through this vlog as well as social media, as well as from the standpoint of our phone conversations, emails, and in-person meetings. We thank you. Have a happy new year. Continue the celebration of 2020, and we're going to move forward as we watch the coming days and the events as they unfold. Thanks.